All right, we're back, and we had a couple questions come in over the break that we're going to answer for the employers that emailed those in. So Kim's going to go ahead and read those out loud.
If our district gives a check to an employee as a retirement gift or a service award, is it reportable unless it's given after the school year ends and after their last paycheck for regular earnings?
So yeah, I think they're just asking for reiteration on the lump sum reporting rules. Any payments made after the last day of work and after the last paycheck are not reportable as creditable earnings. Any payment made prior to the later of the last day of work or their last paycheck date, that would be reportable as creditable earnings. So if you want to avoid any 6% costs, make sure that those payments are made after the last paycheck and after the last day of work.
I would like to know, in order to get a full year of service credit, you need 170 days. Can you get added months instead of a full year if you have less than 170? For example, if I have 85 days of sick, would you then get 4 months of service added to your credit?
Yes. So the question is, if someone has less than the, say, we'll use 340 days, we do give service credit up to the number of days that they have. So what we do is we take the total number of sick leave days they have divided by 170, and we go out 3 decimal places to calculate service credit. So if someone has 85 days, it will come out to 0.777 or whatever that calculates out to for service credit. So we do give partial years of service up to the maximum of 2 years. Same thing with days paid. For anyone that works the school year, we calculate it the same way. We take days paid divided by 170 for each school year, and that's the amount of service credit they get for that year. And we go out 3 decimal places.
Jane, that question came in about months of service.
Yes, okay. Yeah, the question that came in by way of months of service, we don't give months. We give service credit based on the 3 decimal places. So it's to the day is what it is for service credit, not by month.
And we're the only system that does that.
Yes, we are the only system that does that. I know other pension systems give credit by the month. I think IMRF does it that way. Yeah, we actually give service credit to the day. Okay, we're going to, the second half of the session, we're going to cover the employer access area. This is where we're going to talk about supplementary reports and annual reports, and I'll kind of take you through the menu whenever you sign into your account. So about a year ago, we did update our website address, and we do have a new homepage. Whenever you log into onto our website, the current address is www.trsil.org. And whenever you log in, this is the home screen. The picture does change here on, there's a couple of different slides it switches to. But we have a nice new employer login button that we didn't have before, so you can get yourself straight to your login screen. Once you enter your user ID and your password and answer a challenge question, you're going to be taken to the employer access area, and you're going to have a menu there on your left-hand side. So we're going to kind of go through the different areas of the menu. The first section up here is basically your account. So this is where you can make changes to your user ID, your password, or your challenge question answers. I know a lot of people get locked out or kicked out of the system whenever they can't answer their challenge questions. I think we have about 10 or 11 questions out there. You don't have to answer all of them. We only need answers to 3 of those questions. So at any time you can go in and change those or get rid of some of them if you've answered too many. And I know that's one of the biggest problems is I don't remember what my challenge question answers are. We also have access to your user ID and your challenge questions answers, but we do not know your password. So if you ever forget your password, you actually do have to click on the Forgot User ID Password link in order to change that. If you need to update your contact information, for instance, your phone number, extension, or if you get a new email address, we ask that you log in and do that through the Contact Information menu button. If you are a security administrator for your district, every district does have to identify or name someone as their security administrator. That security administrator has quite a bit of control. You can add new users, you can unlock the accounts of your existing users, but you can't unlock your own account. So if you are a security administrator and you get locked out, you do need to contact us and we can unlock that for you. It's very simple. It just takes a few seconds for us to unlock your account. We do ask that each user have their own login. Please don't share logins. If you are a new employee of the district and you have the login information of the old bookkeeper, please give us a call so that we can give you your own login information. We don't want anyone sharing or using old ones. We also want to get prior employees, their accounts deleted so they no longer have access to the information as well. You also must log in every 35 days in order to avoid being locked out. And we do send a reminder email about 5 days before that 35-day lockout to remind you to at least log in so it resets your account. This is what I mentioned. Oh, got a question.
We received an update from Skyward with a new FTE field in our employee database. Skyward said this was TRS generated. Since this is new, what was the reason? When we have substitutes, they show up as an S on the annual report versus full-time or part-time. How should these positions be tagged?
Okay, this question is regarding the new column or the new box that we've added to the annual report for full-time equivalency. I'm actually going to wait and answer that question and show you this whenever we get to the annual report section. I'll talk about that in more detail. To answer the question, it's only going to be required for full-time and part-time contractual employees, but when we get to that slide, it's going to make more sense on that. I mentioned earlier we have an employee information section where you can actually look up Social Security numbers. You can enter a member's Social Security number and you can find out if they're Tier 1 or Tier 2. You can find out whether or not they are retired from TRS. It does not include anyone that's retired under a single sum retirement benefit, which is a one-time payout benefit someone can get if they are over age 65 with less than 5 years total accumulated service. And it also doesn't let you know if someone's a Chicago Teachers Pension Fund retiree, because if you recall, CTPF retirees are allowed to sub in a post-retirement employment capacity and be limited to the 100 days or 500 hours. So our system doesn't tell you that. But anyone that's over age 55, that's the youngest they could be to be retired. So if they're under 55, they're not going to be retired from TRS or even from Chicago Teachers Pension Fund, at least as far as I know. So if they're over 55 and you're unsure, that would be the ones you would want to look up. You can call us and we might be able to tell you whether or not they're retired from Chicago Teachers Pension Fund if that is the case. Under the reports menu in this section, you can view or print reports. I mentioned this earlier as well. It's going to be based on your most recent annual report that's on file with us, which is your 2016-17 annual report, and you can run reports to show a list of employees that are Tier 1 or Tier 2, or you can run one report that shows both Tier 1 and Tier 2 employees. The next section is the accounting menu. From the accounting menu, you can do many different things. You can view your contribution account, so you can see all of the deposits that you have made for the year. You can look at your billed employer and member accounts. The billing, that is available around the 25th of each month. So if you owe us any employer costs or you pay your trip insurance premiums for any retirees, we bill that to you once a month around the 25th of the month. Online payments, this is where you go to make your payments, your pay period contribution payments, or to pay anything that we have billed you for. Once you click on this menu option, you're leaving TRS's website. So you leave our website and you go to the First Data Government Solutions website. It has its own user ID and password login. It is not the same as the user ID and password login information you use to get into the employer access area. If you have problems with that section, you do need to contact them. And I believe they have a toll-free number on their home screen page. From the reports menu, you basically can view or print any of the billed employer or member account reports. You can print out your contribution account reports. You can also print out the fiscal year contribution totals report or the GASB 68 disclosure report for your external auditors. I know when your auditors come in this summer, they ask for a couple of reports. This is where you can access and print those from the reports menu. So you've got the GASB 68 disclosure report. There are 3 years available out there. You can print one for fiscal year 2016, 2017, or 2018. And then the fiscal year contribution totals report, that'll be for the most recent fiscal year that we have contribution totals on file, and it basically shows your total deposits for the whole entire year. You can also print out or view your pay period schedule report from here as well. The last menu item here in the accounting section is for the payroll schedule. A lot of you have probably already done this, but around the April 20th of each fiscal year, we send a reminder out to districts to go in and enter your payroll dates for the upcoming fiscal year. That then generates your pay period schedule report that you can use to keep track of the deposits that you make. If you have any changes to your payroll schedule, you're allowed to go in and make any changes, I believe, up to around the 25th of August. After that time, you do have to contact our accounting department, and they can make the changes for you. So it's not a big deal if you do have date changes to any of your payroll dates that you've previously reported to us. The next section is the claims section. This is probably something that you guys have started to work in recently. This is where you find out if you have any supplementary reports or sick leave certification forms that are due to TRS. Supplementary reports allows TRS to go ahead and process a benefit or a refund without waiting for the annual report. So it's required if you do have someone that applies for a disability benefit, a retirement benefit, if there's a death benefit that has to be processed, or if someone wants to take a refund of their contributions. This is members' responsibilities. So this process does have to be initiated by your members, not by the employers. You guys can't go out there and initiate the process to get a supplementary report released to the employer. Members do have to contact member services to request any kind of a benefit or a refund. If you're expecting to see one of your retirees in your listing and you don't see them, chances are they haven't contacted us yet. So a lot of retirees are under the misconception that they only need to let their district know that they're retiring, but that's untrue. They actually have to contact TRS and let us know. They can also do their personal retirement interview online through their member account, so they don't have to physically call. They can apply for the benefit online. The system does not allow you to submit the supplementary report prior to their last paid day, which is the last day of the school year or their employment agreement that you're paying them for. That's the earliest that you can submit the supplementary report. So in the next slide here, I've got an example of what the supplementary report screen, the entry screen, looks like. And this is actually the second screen you're going to see. The first screen, whenever you open or click on Update next to someone's name from your Sup Report / Sick Leave Certs Reports menu on the left-hand side, is going to take you to a screen that gives you a pop-up box where you have to enter some date information. So from that screen, you're going to see under Employment Information, those are the dates that you enter from that first screen. It's going to tell you the claim type, so you're going to know what kind of benefit they are applying for. The last day of the school term or employment agreement, if they're a teacher, that's the last day of the school year. If they work beyond the last day of the school year, then that is going to be what it means by saying employment agreement if longer. So if you have an administrator, a principal, or a superintendent that works through June 15th or June 30th, that is the last day of their employment agreement. The last paid day, inclusive of paid sick leave days, this is not the last paycheck date. There's a lot of confusion with this box. We actually ask for the last paycheck date on the second screen that you see. The last paid day is the last day of the school year or the last day of their employment agreement for which you're going to give them payment for. Okay, so if your last day of school was June 1st, then June 1st is their last paid day. If they're an administrator working through the end of the school year, which is June 29th this year, that's their last paid day. Effective date of resignation, and that's normally the same day as the last paid day. The three boxes here, last day of school term, last paid day, and effective date of resignation. For anyone that works the entire school year and is applying for a benefit at the end of that fiscal year, those three dates are most likely going to be the same. You report the number of unused uncompensated sick leave days to us on the first screen. This is the total number of sick days you're turning in. Okay, so keep in mind the rules we went over earlier for the payout of sick leave days. As of the last paycheck date or the last day of work, how many days are on record with the district? Turn those into us. Remember to be sure to include unused personal days in that final year as well as part of that total. We have emailed several bulletins recently with supplementary report reminders, sick leave certification reminders, and I also want to go ahead and mention if you're a first-time person of filling out a supplementary report, or if you don't do it very often, you want a reminder of it, we have a tutorial out on our website as well. So there is a supplementary report and sick leave certification tutorial on our website. We actually have an employer tutorials menu button on the left-hand side from the employer homepage that has lots of tutorials out there. The last box on that first screen that you're going to get is employment type. There are 5 different employment types. There's full-time, part-time contractual, substitute, part-time non-contractual or hourly, or there's E for extra duty. I'll go over those in more detail whenever we get to the annual report. There are rules on what a person would qualify for if we consider them full-time. You may have a part-time employee that TRS considers full-time. To be full-time, you do have to work 5 days a week, 4 or more clock hours per day. Okay? So they do not have to work a full day to be considered full-time for TRS purposes. Part-time contractual employees would be anyone that works 5 days a week, less than 4 clock hours a day, or they work a schedule that's less than 5 days per week. That is part-time contractual. So once you have that information entered, you click on the Save button, and it's going to take you to this screen. This screen is where you enter your earnings information, and you're going to see that the first box there is data last payment for regular earnings. So this is where you actually enter the last paycheck date. Okay? So last paid day, like I said from the first screen, is not the last paycheck date. It's the last day of the school year or their employment agreement that you're paying them for. Data last payment for regular earnings, that is their actual last paycheck date. Underneath that, you have number of days in employment agreement. So this is the number of days in their contract year. Teachers, it's normally 180 to 185, whatever your school calendar is. For administrators, we see anything from 220, 240, 260. It is dependent upon their schedule. You do have to actually physically count those days to come up with them. So you have to be able to establish their calendar. If it's a July 1 through June 30th employee, it's 260 days for 2017-18. Total number of days paid, that is the total number of days that you are paying them for. So if they work the entire year with no docs and pay, full day docs and pay, then the total number of days paid is going to equal the total number of days in the employment agreement. As far as days paid, I kind of mentioned this earlier, we do not give partial day credit. We give full day of credit for each different day that they work on as long as they're doing licensed work, even if it's 1 hour. If they work 1 hour and they're paid for that 1 hour, they get a full day of service credit for that day. Same thing goes if you dock anyone partial days. If you're docking them a quarter of a day or a half a day, you're still giving them credit for that day. It's still a full day paid as far as reporting purposes for service credit. Be careful with payroll software that tracks sub days. We've seen this a lot with field audits recently. Some payroll software systems don't track sub days correctly. They're really good at taking partial days and combining them into full days instead of giving separate day of credit for those. Also, some payroll software systems, we notice that if you use ASOP and a person subs for 2 different people in one day. So in the morning if they sub for teacher A and in the afternoon they sub for teacher B, ASOP actually enters that as 0.5 of a day. And if you're just going through and tallying up full days versus half days, you're counting that as 2 separate full days, but they're working a half a day on the same date. So you need to pay attention and double check. Don't 100% rely on your payroll software tracking for sub days because we do find errors with that. So keep that in mind whenever you're trying to calculate total days paid. The annual salary rate and creditable earnings columns on the supplementary report. The total line, this is what should match or is very similar to what you see on the annual report. With the supplementary report, we do ask you to break it down in a little bit more detail. That top line for base salary, this would be their full year base salary amount in the annual salary rate column. So if they were to work their entire year, earn their full salary, plus if your district pays any portion of the 9%, the 9% factor or whatever factor you use should also be included in the base salary or annual salary rate columns. Actually, that goes for all of these boxes. Board paid TRS does get added to and included in every single box shown on the supplementary report when you're completing these. So your base salary line, the annual salary rate and the creditable earnings are going to be the same. They're going to match as long as your individual worked all year with no docs and pay. If you have anyone that was docked in pay, or if they started the year late, quit the year early, annual salary rate base, that's actually going to be their full year amount. The creditable earnings is going to reflect what you actually paid them for the number of days they worked. So your annual salary rate is going to be greater than your creditable earnings on that base salary line. For the second line, flexible benefit plan, if your district does have a flexible benefit plan, the annual salary rate and creditable earnings. Beginning with the 2017-18 school year, we're no longer asking you to project out the full year amount in the base salary boxes. Rate and earnings, in the flexible benefit plan boxes, rate and earnings are equal. So you report it equal to whatever benefit they are receiving. So if they're not getting the full benefit, you don't have to show the full benefit as annual salary rate. Rate and earnings get reported equal at the actual amount of benefit that they received through the flexible benefit plan, the cash option. Same rule applies for the extra duty line. We started that the fiscal year before. Extra duty rate and extra duty earnings are equal. You never would project rate to be higher than the extra duty earnings. Report it equal to what they were paid. So lump all of their extra duty earnings together if they have several. If they're a coach and they did a lot of detention duties or have a lot of miscellaneous extra duties, add all of those extra duties up and enter one total for extra duties on the supplementary report. That next line there is for severance and lump sum payments. This would be any kind of bonuses that are paid in a lump sum, payout of sick leave days if it qualifies as creditable earnings, payout of any kind of retirement incentive if you pay it as a lump sum. If you're paying retirement incentives as part of their regular salary, we ask that you go ahead and report it on the top line as part of base salary. You don't have to calculate it and separate it out. It would only need to be entered in the severance lump sum boxes if you pay it as one lump sum check, say at the end of their career. If you do have an amount entered in the severance and lump sum boxes, it is going to require that you enter the date of service, the date of payment for that severance or lump sum. So we want to make sure that it does meet the requirements to be reportable as creditable earnings by being paid prior to or with that final paycheck that you have entered. Once you get all of your information entered, you do have to total up your columns and enter that. The system does not do it for you. The TRS contributions box, that is 9% of whatever you have in the total creditable earnings box. Okay? And you're going to notice once you hit the save button, what I have done is I've kind of entered some wrong information here so I can show you the edit process. Once you hit the save button, if there are any edits that invoke, they are going to appear at the top of the screen. So I've got a couple of examples of some of the edits that you might see. Any edits that appear in red, those are fatal. So there is something wrong here and you do have to fix it. You're going to see the fatal edit that I invoked here is I did not enter the date that the lump sum payment was paid on. So once you enter that date, the fatal error will go away. So you are required to correct all fatals before it allows you to submit the supplementary report. For any of the edits that appear in black, those are non-fatal edits. Those are reasonableness checks. It doesn't necessarily mean that you have an error. It just means that you may have to provide us with an edit explanation, which is the box that you see here on the screen. Edit explanations are very, very important. Please enter information here and give us good edit notes. The more information you provide us in the edit explanation box, the easier we are to answer all of the questions we have on our end once the supplementary report comes in, and that will also cut down on phone calls or us emailing you with questions and contacting you. Whenever you have your edit explanation entered, you can just save with errors. If there are no more edits that invoke after any of the changes that you have made or you are comfortable with the information, there's a Submit to TRS button at the bottom of the screen. Okay? That supplementary report does not get submitted to us until you actually hit that submit button. So it's not an automatic submission. You do have to actually physically hit that button, go through a couple of steps to submit that, and then we will notify you, or it will give you a message up on your screen that says it has been successfully submitted to us. If you are filling out a supplementary report for retirement benefits, you're also going to be required to complete a sick leave certification. The sick leave certification is on the exact same screen. If you scroll underneath the supplementary report, you're going to see the sick leave certification. This is the form we use to determine if you're going to owe a cost for giving any excess sick leave days. It's going to ask for a couple of numbers here in the columns for the last 4 years. So this is the final 4 years of employment with an employer. And there's a chance that you may even be asked to complete a sick leave certification form and not a supplementary report. If the employee did not work for you all of their 4 final years, then we may be asking you, let's say they worked for your district in 2014-15 and 2015-16, and then they went to another district for their last 2 years, you're still going to have to complete the sick leave certification form for the years that they did work for you. So there is a chance that you could just have a sick leave certification form that you're required to complete, but not a supplementary report. Column 1, this is the teacher's normal annual allotment of sick and personal leave days for use as sick leave that they were given in each of their last 4 years. Okay, so as long as you allow your employees to use personal leave as sick leave, it doesn't get included as part of their normal annual allotment. And keep in mind, this is where they would fall in the teacher's collective bargaining agreement. If they're an administrator that receive a higher allotment of days, column 1 is going to be different than column 2. Column 2 then reflects the total number of days that were added to this member's record in each of the last 4 years. So in this example, I'm actually showing if you have an administrator that gets more days than your teachers. So let's say you have teachers per the collective bargaining agreement get 12 sick leave days plus 3 personal leave days. So you would reflect 15 in column 1. Your administrator gets 17 sick leave days and 3 personal leave days. They're actually getting an allotment of 20, which goes in column 2. So the district would be subject to cost on those 5 extra days they receive in the last 4 years. Question, yes.
What do we put for date of last payment for regular earnings if we pay them throughout the summer, even though their actual retirement date is the last day of school?
Okay, good question. I'm going to flip back to the supplementary report screen so we can look at that. So the question is the date of last payment for regular earnings. What do we put there if we're paying them over the summer? You put the actual last paycheck date there. There is a large misconception that retirees have to be paid off by the last day of school or have to be paid off by June in order to get their first retirement check. That is false. The last paycheck date has no bearing on when they're going to receive their first annuity check. It honestly just depends on when the supplementary report is received, when we receive all of the paperwork for the member, and how long we can get that processed on our end in order to get them on payroll. We can get some on payroll maybe as soon as June 15th or June 30th that have retired, especially at the end of May, if all of the information was received in a timely manner. So date of last payment for regular earnings is truly the last date they're going to receive their final paycheck from the district, even if it's in August.
If number of days in employment agreement are 180, but they work summer school for 15 days, would I put 195 in both number of days in employment agreement and total number of days paid?
Yes. The question is for summer school, anyone that works additional days for summer school. I gave this example earlier when I was talking about reporting the extra days for summer school. If a teacher's contract period is 180 days and they work 15 additional summer school days, you are reporting 195 as the total number of days in the employment agreement and as the total number of days paid. So any additional days worked beyond their regular school year or employment agreement do get added in and reported as both contract days and days paid.
And that does affect the retirement date?
Yes, it does affect their retirement date. That's another good question. If they are working summer school, their actual last paid day and their last day of the school term and effective date of resignation, those first 3 date boxes, has to be the last day they're working in a certified position. So if they're doing summer school through June 29th, that makes their retirement date, the last day of the school term or employment agreement, that all has to be June 29th. It's not the last day of the school year because they're still working in a licensed position past that date.
If our CBA has a tiered sick leave allotment based on end of year balance, should we use the maximum number? I'm going to guess in column 1 that they're talking about.
Okay, repeat that because, yeah, I didn't follow that question.
If our CBA has a tiered sick leave allotment based on end of year balance, should we use the maximum number?
So they're getting bonus days if they have a certain level.
I don't know that that's the question. No. The question, I believe what they're saying is, okay, if you have a tiered system, and the tiered system is based on your accumulation. So if you have 150 days accumulated, you get 17 sick leave days per year versus maybe 15 if you're less than that. What are you reflecting? In each of the year, you're reflecting what they actually were given, what they were entitled to, what number of days were added to their record, or what they were entitled to at the beginning of those last couple of years. So if you do have a tiered system, it's where they would fall in that tiered system. So if they are at that accumulation and they get the 17 days, that's what you're reflecting in column 1. If that's all that they receive, then column 1 and column 2 are going to be the same. The only time that column 2 is higher is if you're giving more days than what a teacher would be entitled to or per the collective bargaining agreement. So I hope I answered that question. If I didn't, you can try sending it back in, maybe wording it a little differently if I did miss that, because I don't think it's talking about giving any kind of bonus days. If you do give bonus days and the days meet the 3-step formula, they do get reflected in column 2. So that's when your column 2 again will be higher than your column 1. That it for the questions?
I have a question.
Yes.
On the supplementary report.
Hold on just a second if you don't mind. So we have a question on the supplementary reports.
So back to the number of days employed. So I have a teacher that worked contract 180 days, but they're docked 5. So the first line is 180 days. The second line would be 175, correct?
That is correct.
So then down to where the annual salary rate, I would put on the first column what they would actually get paid if they worked 180 days.
Yes, that's correct.
And the second column would be actually what I paid them
Yes.
minus the dock days.
Yes, that is correct. So if you have someone that is docked, the number of days in employment agreement is the full year contract amount, in your example 180. The number of days paid is the actual number of days you're paying them for. So if they're docked 5 days, your days paid is 175. And then yes, on that baseline, annual salary rate is the full year salary amount, what they would have earned had they worked all 180 days without any docks and pay. And then creditable earnings reflects what you did pay them for the 175 days. Any other questions you guys can think of on supplementary reports or sick leave certifications? Once you submit the forms, and if you ever find that you've made an error or something got left off of the supplementary report or even an error on the sick leave certification form, you do have the ability to revise both of those. So there is the option to revise a submitted sup report or revise a submitted sick leave certification. And the menu item is right there on the left in the claims section. You would just follow the on-screen instructions. What it does is you put in the Social Security number of the person you're wanting to correct, and then it will show you what you originally submitted, and then you just make any needed changes. You do have to tell us why you're making the change, and then you submit it to us, and we'll get that change updated for you. And you can do that at any time up to the point that we set your annual report to audit complete. So you have quite a bit of a time frame there that you can make changes to the supplementary report. If you need any help with that or have any questions, again, feel free to give us a call on that. Did I have a question?
If we have sick leave and personal days broken up, I have to report both the sick and personal leave days together. In other words, we give each teacher 14 days of sick and 3 days of personal. If the personal days are not used, then they roll into sick days.
Yes, so the question is if the contract lists sick leave days separate than personal leave days, which is how most contracts I've seen are worded. And I think, did it say they give 14 sick leave and 2 personal leave days? 3 personal leave days. Okay, so if you have 14 sick leave days and 3 personal leave days, as long as they can use those personal leave as sick leave, we consider that part of their normal annual allotment. So 17 is what would be reportable in column 1 on the sick leave certification form.
If the CBA allows 14 days for full-time members but only 7 for a part-time number, do we enter 7 for the part-time member on the sick leave certification?
Yes, you must enter on the sick leave certification what that member was entitled to in column 1. So if they are not a full-time employee, they're part-time, and they have a lesser amount of days that they are allotted, a proportionate share of it, then column 1 reflects what that member's normal annual allotment would have been in the collective bargaining agreement. So you would show a lesser amount there. You would show the 8 or whatever it is that they are entitled to, plus personal leave days or whatever portion of personal leave days that they receive. Another one?
They keep coming in. How is the supplementary report filled in with the governor's statutory salary max for Tier 2 member cap at $177,412?
Okay, well, keep in mind, you've got 2 different things going on with that question. The question had to do with filling out the supplementary report for someone that is subject to the governor's statutory salary and also the Tier 2. If you have someone that's being paid above the governor's statutory salary, that's not going to apply for a Tier 2 member because they are limited, keep in mind, at the $113,644.91. That's all you're reporting on here. That's all that we could ever charge you a cost on. So you're not going to get charged the governor's statutory salary for anyone that's a Tier 2 member that exceeds the $113,644.91. Even though you might actually be paying them that, we're not recognizing that as creditable earnings, and the governor's statutory salary is based on reportable creditable earnings.
And the governor's salary is not a cap.
Yeah, the governor's salary, right. It's not a cap. You're going to report the full salary they receive. It's a cost to the employer on the amount that exceeds $177,412. So full salary is still reportable if they're a Tier 1 member. If they make $250,000, you're reporting the full $250,000. Once you file the annual report, that's where we're going to actually charge a cost for anything that's above $177,412. Everything's reportable as normal. You guys don't have to do anything differently for the governor's statutory salary as far as reporting is concerned. Just be aware that you're going to owe a cost if the salary exceeds that amount.
In regards to retirees, can they receive a paycheck in July and August even if they wish to receive their first pension check in June? We have always been under the impression that we need to pay out their contract prior to them receiving their pension.
Yes, I mentioned this earlier. That is a large misconception. You do not have to pay out your retirees in June for them to get a June pension check. You can continue paying them over the summer. They have earned their full salary as of the last day of work, but how you choose to pay them out, that is strictly up to each individual district. It has no negative impact on when they're going to receive their first retirement check. That it for the questions there? Okay. Anybody out here have any other questions you guys can think of?
Jenny, quickly, can you talk about the sick leave questionnaire and how it relates to the sick leave cert?
The sick leave questionnaire that we send out in the spring?
Yes.
Okay. So every year around February we send out a sick leave questionnaire to every school district. On that questionnaire we're actually gathering information on what you guys offer as far as, do you have a tiered system, how many sick days and how many personal days do you offer on a yearly basis. We also ask if you've granted any excess days to anyone, and I believe we also ask if your administrators receive a higher allotment. Excuse me, that's a new question that we added, I believe, last year, if your administrators receive a higher allotment. We keep track of this. We have a database on our system of sick leave days offered to every school district in the state. So however you answer that questionnaire on a yearly basis, we update our records. So when the sick leave certification forms come in, we also have built-in edits on the sick leave certification form on our end that alerts us that the days you reported on the sick leave certification either seem reasonable compared to how you have filled out that sick leave questionnaire, or they don't seem reasonable. And so we will kind of ask questions based on that to make some determinations. So that sick leave questionnaire we send out in the spring is directly related to the sick leave certification. But again, all of that, a lot of that is on our end. There are a few built-in edits that the employer receives on your end, but normally that's if something looks possibly blatantly wrong or we need some explanation on it. Another question.
For the governor's statutory salary, are current contracts grandfathered in, and are we not charged the cost if salary is over that limit? Okay.
Repeat that again. Are they asking about the new legislation with the 3%?
The governor's cost of the 177, they want to know if they're grandfathered in,
No.
if they're in a current contract.
No, I think I answered that question already. There is no grandfathering. There are no exemptions. The cost is for creditable earnings on all earnings for starting with fiscal year 2017-18. So there is no way to get out of the cost for this year. Everyone is going to, any employee that exceeds 177,412, Tier 1 employee, not Tier 2 because they have a limitation, but any Tier 1 employee that exceeds the 177,412, the employers are going to owe the cost. We will not waive it. There are no exemptions. And this is going to be the first year then again that we're going to bill for that. And it's billed on a yearly basis. So every year that they go over, you're going to owe that cost over and over and over.
And that's because there was nothing in that part of the legislation that allowed for...
Yes. Yeah, there was nothing in the legislation that allowed for any grandfathering or any exemptions for that. It was just put into place as is effective July 1st of 2017, so on 2017-18 fiscal year earnings.
So for a Tier 2 member, if they retire with the cap of 113, but we pay them more, how do we fill in the supplementary report? I'm assuming the annual salary rate would be what we actually paid, and the credible earnings is the cap of 113.
No, that is not true. For anyone that is Tier 2 and subject to the limitation of 113,644.91, that is all you're reporting to us. That is their annual salary rate, and that is the creditable earnings. So as far as the supplementary report, you would break it down to where that total line cannot exceed the 113,644.91 on a Tier 2 employee. Regardless of what you pay them, we don't care. You don't report that to us anywhere. You do not show that. You show a limit of 113,644.91 for annual salary rate and creditable earnings if they work the entire year. If you ever have a Tier 2 employee that works a partial year, we will prorate their salary. But again, we prorate it based on a maximum of 113,644.91.
If the last pay for a retiree is in August and the supplementary report cannot be submitted until then, when can the retiree start collecting?
Okay, that's actually incorrect in that question. The question was if they do not get their last paycheck until August, then that means you can't submit the supplementary report until August. That's incorrect. You submit the supplementary report based on the last paid day, not the last paycheck for regular earnings. That's the big misconception I was talking about earlier. The last paid day is the last day of the school year or employment agreement that you're paying them for. So if your last day of school is June 1st, that is that employee's last day. June 1st is the earliest you can submit that supplementary report. It's not the last paycheck date. It's the last day of work for the school year. That's it for questions for now? I'll go ahead and go. Well, what's the question? Is it regarding something coming up or that I already talked about? Okay, we did have a question come in about the changes from 6% to 3%. I'm not going to answer any of those questions right now because, as we mentioned, Grant's going to actually do an overview of the legislative changes at the end. Okay, so we'll talk more about that, or at least what little we know about it as of right now. Okay, from the reports menu under the claims section, you can print out or view any supplementary report and or sick leave certification form. So you can print out any that you've already submitted. You can even print out or look at blank ones. I know a lot of districts might feel more comfortable if they had a blank copy in front of them that they can pencil in the information before you enter it online and submit it. So you do have that ability through the reports menu to print any of the supplementary reports or sick leave certifications out, even prior year ones. So they do go back. All right, any other questions you guys can think of on the supplementary reports or sick leave certifications before we move on to annual reports? Okay, I'm going to actually have the crowd question come up first, and then we have, I think, some more that came in through the internet.
Sorry, I'm just a little bit confused. So the last day of work is not the last day of school if they teach summer school?
That's correct. Yes, the question is the last day of work is not the last day of school if they teach summer school. The last paid day is the last day of the year they are working and being paid for. Okay? So if summer school goes through June 29th, that is the last pay day for that employee. But if it's a regular teacher retiring and they're done working June 1st, then June 1st is their last paid day.
So do we need to wait until summer school starts to find out who's working it? Because we in the payroll office don't know ahead of time who's working.
Yeah, potentially. If it could be one of your individuals retiring this year, yeah, you would want to wait to submit the supplementary report until you know for sure if they're going to work summer school. I mean, I would assume that they would notify the district as of when they're going to resign, but I know that communication sometimes doesn't happen. So yeah, if you want to hold off and wait, worst case scenario, if you fill that supplementary report out and submit it, and then you find out they work summer school, you just need to revise it. So you can submit a revise to make that correction. Chances are we may go ahead and calculate their pension on the original information, but we'll always go back and do a recalculation on any revision that comes in at a later date, and we'll make up for that on our end. Any other questions? I know Kim has some.
Another on the governor's cap in Tier 2. I think that's causing a lot of confusion. Tier 2 member who is paid over the 113 but less than the governor's cap is the annual salary rate and their total salary and credible earnings 113 on the annual report. So they want to know if they're supposed to be putting the Tier 2 cap or what they were actually paid because of governor's salary.
No. The governor's salary, again, That is a cost that we are going to assess based on what they are paid and what is reportable for them based on what tier they fall under, what retirement tier. So a Tier 1 employee has no salary limit. Everything is reportable to us that they are paid. If it goes over 177,412, we're going to bill you a cost. It has nothing to do with how you report it on the annual report or on the supplementary report. For anyone that's Tier 2, just like in the past, you report to us up to the limit of Tier 2. If you're not aware that they're Tier 2, we have edits on our end. We're going to catch those individuals. We know if they're Tier 1 or versus Tier 2. So if you report them incorrectly, we'll catch that and make the correction. But if they are a Tier 2 employee, you're reporting as annual salary rate and creditable earnings, the 113,644.91, as long as they work that full year. So don't get the two confused. There is nothing, you are doing nothing differently this year as far as reporting except the full-time equivalency, which I will talk about when we get to annual reports. That's the only thing that's new, and that's the only thing that affects reporting for this year. Everyone gets reported just the same as they did for any prior fiscal year, subject to any Tier 2 limitations, just like in the past. If they're Tier 1, they don't have any kind of a salary cap as far as reporting.
What if summer school goes into July for a retiree? Do we postpone their retirement date to the next TRS year?
Yes, yes. If they are not done working, they cannot retire until that last day of work. So if they're going to work summer school into July, that makes July their retirement date. Keep in mind with that, if they retire, they have earnings in the next fiscal year. So that gives them fiscal year earnings for 2018-19, they're not eligible to return in any kind of a post-retirement capacity until July 1 of 2019, which would be the 2019-2020 school year. So it does impact post-retirement eligibility as well. If they're going to retire, they need to be done. They need to stop working. And if they're going to continue working, their retirement date is going to be postponed or prolonged out until they are done doing all licensed work, including all summer school work. Are we good with the questions for now? All right, perfect. We'll move on and talk about the annual report. So I know this is a very stressful time for employers because you do it once a year. So everyone gets nervous about the annual report season whenever it comes up. It gets very busy for us as well. Even though you guys are worried about the annual reports, keep in mind you only have to file one annual report, the annual report for your district. There are 10 of us in our office that get to review all 990 some of the annual reports. So there's a lot for us to do. So it's stressful on our end just as well. There is a due date, of course, for the annual report. It's August the 15th. That due date is stuck in stone. It does not fluctuate. You have access to the internet to do the annual report 24/7. So if August the 15th does fall on a weekend, it's still due by 11:59 p.m. on that date. There is a $250 per day penalty for every day that the annual report is late. We do not have the ability by law to grant any kind of an extension on that. That is the due date. If it's late, you are automatically assessed a penalty for that. Keep in mind what I mentioned earlier. If you do get a penalty for a late annual report, you can always ask that we waive that penalty. So you do have the ability to ask for a waiver, but we cannot give any kind of extensions by law. In annual reports that fail to materially conform to any of our applicable laws or rules could be rejected to us or deemed not received until they are corrected and properly submitted to us. So keep in mind, you can't submit an annual report that's half completed or with half information, or if it's a large annual report and it doesn't have good edit notes, we could possibly reject that annual report. If we can't do our job with auditing it once it comes in, we're not going to consider it acceptable. Okay, so do make an effort, enter good edit notes so that we don't have any issues with this. It doesn't seem to be a big issue every year, but it's just something we want to kind of remind districts about. All right, you have a couple of options in order to get your information into the annual report. Under the Import, Recover, Delete menu, you have the ability to import data from an employer file that gets created from your payroll software system in most cases. You can recover data from the prior year's annual report. What this does is it recovers all of your people reported on the 2016-17 annual report, and it retains some of the information, but then it allows you to enter any current year earnings information for those individuals. You also have the ability to create an Excel spreadsheet file. With this option, we added this in several years ago. it's an easier way to get the information in versus going screen to screen and entering your information if you're going to recover. If you have a lot of modifications to make to your imported data, you may want to use this option as well. Simply what you do is just click on that. Once you have imported or recovered, you click on the Create Spreadsheet File menu option. It's going to create a spreadsheet file with you with all of the column headings, all of your information, so you can easily go in and manually make updates. This might be something you consider using for the full-time equivalency that's going to be required this year that I'll talk about on a future slide. Once you do your Create Spreadsheet File, you then have to get that information back into the annual report. If you need help with this, we do actually have printable instructions from the menu item. You can follow the step-by-step instructions, or you can give us a call and we can help you if you're having any difficulties with that. From this menu, you can also delete out earnings information. So if for some reason you need to start over but you don't want to delete your people, you can just wipe out the earnings information. Or you can delete all employees from the annual report. And I know this option makes a lot of districts nervous, but it is something that you're going to have to do if you use the Create Spreadsheet File. Okay? Because once you create your spreadsheet file, keep in mind you still have information, your original information in there. You're going to have to delete all of the employees from the annual report to wipe that out so that you can re-import your spreadsheet file that you created. Again, those steps are in the instructions that you can print out from this menu. If you have questions or need help, feel free to give us a call on that as well. The next screen, or the next menu option you're going to have is your employee list. This is where you're going to do most of your work from this option. It's going to list all of your employees that are on the annual report. It's going to display their name and their social security number. It's going to show if there's any edit codes that have invoked for these individuals. It's going to show if they have any fatal or non-fatal edits. And then you have a link to update. To the left of the name of the social security number, there is a blue hyperlink that says update, and that will get you to the screen where you need to make all of your changes. This is what the update screen looks like. So at the top, you're going to see that we've got some demographic information there. You can jump to the highlighted sections that you see under Update Employee, where it has blue hyperlinks for earnings, terminated sick leave, leave of absence, or sabbatical. You can jump to those sections by using these hyperlinks. Otherwise, you can just scroll your screen down and they're going to appear one after the other. If you have any new employees this year that we do not have, or we do not recognize their social security number, you are going to be required to provide addresses for new members. This started last year for fiscal year 2017. So it does require that you enter addresses on anyone that we don't recognize their social security number. And then in the earnings section, that is where you are going to complete the information. And what I'm going to do is I'll flip to the next one here. I made the earnings section a little bit bigger so you can see it a little bit better. So we'll spend a little bit of time on this section going over how to report someone on the annual report. As I mentioned briefly earlier, for type of employment, there are 5 types of employment. I did touch on some of the definitions of them, but I'll go over them again. For full-time contractual employees, that is anyone that works 5 days a week, 4 or more clock hours per day. That is TRS's definition of full-time. Part-time contractual is anyone that works 5 days a week but less than 4 clock hours per day, or they have a schedule of less than 5 days a week. For instance, they work Monday, Wednesday, and Friday. That would qualify as part-time contractual for TRS purposes. Substitute is pretty self-explanatory. Same as part-time non-contractual. If you pay someone on an hourly basis versus them being a substitute, you can report them with the H employment type. Subs and hourly employees, the S and H employment type, those are pretty much interchangeable. The 5th employment type is the E employment type for extra duty. That would be for anyone that only does an extra duty in your district, a non-licensed extra duty such as coaching, but they are a full-time or a part-time contractual teacher of a neighboring district. I mentioned that earlier in the program. They are the E employment type. The new field, the full-time equivalency percent. This is the field that we were referring to earlier, and I think we had a couple of questions on how to report the full-time equivalency. Full-time equivalency is only going to be reportable, or I'm sorry, it's only going to be required for your full-time and your part-time contractual teachers. You don't have to enter full-time equivalency for the substitute, hourly, or extra duty employment types. Okay? So it's only required for employment types F or P, full-time or part-time contractual. It is going to be required beginning with this current fiscal year, FY18, and we're going to require it from this point forward. It does have to be a whole number with no decimals. And it should equal the schedule worked a majority of the year if you have a person that changes position. Now keep in mind, by full-time equivalency, we're not referring to the amount of time they're employed in the school year. So if you have someone that only worked half a year, that doesn't make them 50%. We're referring to what their percentage of employment was while they were employed. So if they were a 100% employee working I think what is required for 100% employees is maybe 5 class periods a day. I think that might be, I don't know if that's a school code rule. If they are working 100%, that's what you're going to report, even if they work a partial year. Okay? So full-time equivalency, for instance, if you have an 80% teacher, someone that only works 4 days a week, or 80% by means of from the salary schedule, you're only paying them a percentage of the salary schedule. Your salary schedule is your 100% equivalency. So it's whatever percentage of the salary schedule they're working that you report for the full-time equivalency percentage. It's not percentage of the year worked. Are there any questions on that that you guys can think of? Because I know that's going to be confusing for a lot of districts. We've sent a couple of bulletins out on this recently too that kind of review this as well.
But I just want to stress that it's not a look back. So you're not waiting until you're working on your annual report and then, like Jenny said, look back on how much they actually worked. This is a contractual percentage. So these people are, this person was scheduled to work the full year. They're going to be 100%. If they're scheduled to work 4 days each week and have 1 day off each week, they're probably an 80% employee. But it's what they're scheduled to work at the beginning of the year, not what they actually looked or worked if you look back. Hopefully that makes sense.
Yeah, and also kind of in lines with that, but what might differ a little bit is if they change position during the year. So if they change position during the year and they start out at a 20% and they move to a 40%, look at what they did for a majority of the year. Okay, so whatever the majority of the year percentage they were at is what you would report as their full-time equivalency percent. Question on that?
Okay, we have a social worker who we pay the full salary. She works 3 days in our district, 2 days in another district. We pay for all of that. We bill the other district and they reimburse us for her 2 days in their district. How do I show that here?
Actually, you're going to show it as 100% because you're paying her full salary. Okay?
Even though we're getting reimbursed.
Even though you're
for
getting
the
reimbursed, they don't report any of her earnings or her days worked, the other district, because they're not paying her directly. You guys are paying her directly. So she is your 100% employee regardless of where she works or how she works that. It's how you pay it. Yes, good question on that, because we do have some that do it that way. Other districts will employ the same teacher to work half in one and half in the other, and they each pay her. Okay? Okay, so yeah, in the past it looks like she was contracted as a part-time employee in your district and a part-time employee in another district. So each district was responsible for reporting the days and the earnings worked in each district. So each district would have reported the percentage, her full-time equivalency percentage. Since it changed and you are now paying her 100% salary, even though she's splitting it between 2 districts and you're billing them for their portion of it, you're responsible for reporting all days, all salary. She's 100%. Do we have questions?
I have an employee who works 1 day a week, 3 to 4 hours a day. He's reported in our system as a .17 FTE. So do I report them as P with a .17?
Yeah, so the question is, and actually you can't report them as a .17. You would actually have to round that up to a whole number. So, or do they mean 17%? Okay, yeah, I forget that's how it is. Okay, so if you have someone that is a .17, which would be 17%, that is their full-time equivalency, and yes, they would qualify as part-time contractual, because even if they work 5 days a week, at .17, you're going to be at less than 4 clock hours per day. So that would be a part-time contractual employee with full-time equivalency equal to 17, because it has to go in as a whole number. You don't put in the decimal for that.
Does FTE change if a person is being docked?
No, the FTE does not change if they're being docked. That's what we're trying to stress. You're looking at what their full-time percentage is at the beginning of the year, so what they are on the salary schedule. If they're paid 100%, it has no bearing on if they're docked during the school year, or if they quit early, or if someone starts late. If they're a 100% employee, that is their full-time equivalency percentage that you're reporting to us.
What if we have a teacher who is teaching an overload? Would their FTE be over 100%?
No, your FTE can never be over 100%. 100% is the maximum. It's regardless of if you're teaching anything extra in a summer school situation, it's what their full-time equivalency is through the year per the salary schedule. You're still 100%. So it's basically a whole number between 0 and 100%. I don't think anyone should be 0. They shouldn't be reported, but that's what the system's going to allow you to put in. It will not allow you to enter anything greater than 100.
This is my first year doing the annual report. When do you suggest that I start working on it?
Good question. Yes. So the question is, someone doing the annual report for the first time, we actually turned on your access to be able to start working on this year's annual report June 1st. So last Friday it became available. We suggest start working on it as soon as possible. Don't leave it until August 14th if you're brand new, because you're going to be completely overwhelmed. You're going to have a hard time getting it done by August 15th. So the sooner you start it, the sooner you can get it done and submit it. So you can go ahead and start it and let it sit there to see if you have any changes to it and not submit it until close to August the 15th, but do not procrastinate and wait till the last minute to start that annual report, or you will regret it. Any other questions for right now? Okay, so I'll go ahead and leave the full-time equivalency and go on to the next field. I have a feeling we're going to have more questions come in on that. And again, if you guys do have questions on this new field, give us a call. Email us when you go to work on the annual report. We're expecting a lot of questions and phone calls about this. We know it's confusing, but we're trying to make it as simple as possible. It's basically just what they were on the salary schedule, what percentage of an employee you considered them for the entire year. Regardless of what they worked, regardless if they were docked, that doesn't have any impact or bearing on what you're entering here. So again, we went over a lot of these boxes and fields during the supplementary report review. They are the same on the annual report. The difference between the supplementary report and the annual report is you're giving us one total versus breaking it down like you did on the supplementary report. Number of days in employment agreement, again, is the number of days in the school year plus any additional days someone may have worked for summer school. Or if they're an administrator, it's their contract period for the full year. Total number of days paid, that of course is the total number of days that you were paying them for. I went over this earlier. I'll go ahead and repeat it because I know this is something that we get a lot of confusion on. We don't give partial day credit. We only give full day credit. You do add the additional days worked for any licensed certified work they do outside of the school year. So if they're working summer school, extra 15 days, you're actually going to report 195. I think in this example, I went ahead and showed someone that works 10 extra days. So you're reporting 190 in the days in the number of days in the employment agreement box, as well as the total number of days paid box. Do not combine partial days into full day equivalents. So if you have someone that works 2 half days, that doesn't equal 1 full day. They actually get credit for 2 partial days. So we give partial day credit. There is no maximum number of hours or minimum number of hours they need to work in order to get a full day of credit. If they're there 15 minutes doing certified work, they get a full day of credit for that day. It should reflect the number of work days, weekdays, Monday through Friday, for which the member was paid for licensed work. Don't ever count Saturday or Sundays in your total number of days paid or total number of days in the employment agreement. We don't give service credit for any days outside of Monday through Friday. For part-time teachers, the reported days should reflect the person's actual work schedule, not the percentage of time they worked. So for total number of days paid on a part-time contractual employee that works 5 days a week, we want you to physically count the number of days that they were present and they received credit for. That includes any teacher institute days or days they may have attended or been at work outside of their scheduled period. So if their scheduled to work Tuesday and Thursday and you have institute days on a Monday and they were present for those days, they will get service credit for those days. So physically count the number of days your part-time teachers worked in order to give them service credit for. Don't simply take 180 times 70% to come up with their days paid. That's not a true reflection of the actual schedule they worked. Retirement is based on service credit, so service credit is very important, especially with your part-time employees. We do have days worked reports available on our website. So the days worked reports can help you keep track of days worked for your substitutes or your part-time contractual teachers. You can circle the dates worked to help keep you a tally of the days worked throughout the year, and you can total those up whenever you're completing the annual report. And do not include any days on which non-licensed work is done. So if you do have individuals, I know we had the question earlier about attending workshops or attending professional development days during the summer, that is not licensed work. Those days are not reportable, but the earnings are reportable. The annual salary rate, again, like with the supplementary report, this reflects what a member would have made had they worked the entire school year, earned everything they were entitled to without any docs and pay. Annual salary rate on the annual report that includes their base salary amount for the full year, total of any extra duty payments, flexible benefit plan earnings, or severance or lump sum payments. If you have a Tier 2 employee, 113,644.91 is the limit that you report there. This has no bearing on the governor's salary. So if someone makes more than 177,412, again, you report their actual total creditable earnings. Leave the calculation for the governor's statutory salary up to us. It has no impact on reporting. Creditable earnings, this reflects what the member was actually paid for the total number of days they worked. So in the example earlier, if you have anyone that does not complete the year because they've either quit early, started late, or have any docs and pay at all, creditable earnings is going to be less than the annual salary rate. Be sure to include all extra duty payments. Sometimes districts have a hard time with miscellaneous extra duties getting all of those picked up and included, especially if they happen to turn in a late timesheet. Anytime you have earnings performed in the fiscal year July 1 through June 30th, regardless of when you pay it, it is going to be reportable when they did the work. So all of those miscellaneous extra duties that are paid in July for work done in June, those need to be reported on the annual report, reflected in the annual salary rate and in creditable earnings. If you need help determining what you need to report, again, contact us. That's what we're here for. We're here to help you out in any kind of reporting situation or question that you might have. In Chapter 5 of the Employer Guide, we do have tons and tons of reporting examples, so refer to that. If you can't find your specific situation, then you can give us a call and we'll help you figure that out. I do have a note here at the bottom of the screen with the full-time equivalency percent, and that is one of the questions I think that came in earlier. I said I would defer till now to answer, is Skyward, I think, has updated their import file specifications to include a column for the full-time equivalency. We do have the file format specifications out there on our website. So if your payroll software is asking about that, we have updated that specific format that the import file has to be in. And it does include the changes for the full-time equivalency. If your payroll software provider has not made the changes to add the full-time equivalency column, it's okay. You can still create your import file and import the information, but you are going to have to go in and individually enter the full-time equivalency percentage for your full-time and your part-time contractual teachers. So it'll still allow the import if you don't have that information, but it is going to be required before you can submit it to TRS.
And I'll just add that I have had conversations with Chalkable.
Oh, yes.
So I know they are working on it, and they may have it done by now. But just a couple more questions on FTE, and then I think we need to move on from that. And
okay.
People can email the employer's mailbox. But somebody was confused. Your example here shows full-time. This is an F employment type, but it's 80%.
Okay.
Which is, in most definitions, less than, or is a part-time, but
Yeah.
in our world.
That was something I mentioned earlier, is your definition of full-time or part-time may not be the same as TRS's definition of full-time or part-time. Keep in mind, full-time for TRS purposes is 5 days a week, 4 or more clock hours per day, which means someone that is technically 60, 70, 80, 90%, we would still consider them full-time if they're working 4 or more clock hours per day, 5 days a week. Okay? So yeah, it does look strange. But for our definition of full-time, someone that's 80% working 5 days a week, say 5 clock hours per day, that does qualify them as full-time for TRS purposes. But not 100%.
I was going to say this was.
They don't have to match up. Full-time does not have to be 100% equivalency. Full-time has its own definition. Part-time contractual has its own definition. They are independent of each other. So you can be full-time and not be 100%. By TRS's definition of full-time.
And this was almost exactly what you just said. Our full-time teachers are scheduled 6.5 hours per day. Do we calculate the FTE based on TRS consideration of 5 hours per day as being full-time, or do we calculate the FTE based upon the standard 6.5 hours per day scheduled for a full-time teacher?
Yeah, the FTE is based on what you consider that employee at the district level. So if your full-time 100% employees work 6.5 hours per day, they're 100%. If they're paid their entire full salary from the salary schedule, that is a 100% employee. If they're paid anything less than the salary schedule placement, then they are less than a 100% employee. It's however you calculate them. I know a lot of districts enter actually in their payroll software their full-time equivalency. It's already in there, is my understanding, because your system has to be able to calculate what their salary is based on salary schedule placement. So you'll put in their annual salary as being $80,000. Well, if they're 80% of that, the system calculates it as $64,000, and their full-time equivalency is then 80%.
What full-time equivalency number would be entered if the teacher was on a leave of absence for the entire year?
Okay, well, if they're on a leave of absence for the entire year, you have no earnings information. So you shouldn't be filling anything out for this section, and you should skip right ahead to the leave of absence section and complete that. Now, if they're on a partial year leave of absence that's board approved, they're still a 100% employee. It does not have any bearing on the percentage of the year worked. It has to do with what they are at the beginning of the year. Do you consider them a full-time 100% employee? Are they paid 100% off of the salary schedule? Or are they paid less than that? Again, it has nothing to do with the time worked during the year. And again, someone on a full year leave of absence, this section is completely blank. There should not be any information in it at all. Okay, we're going to skip ahead. Oh, no, I got a question here in the room.
But I think I can just ask you, would you fill that in for a person who's hired for second semester only?
Yes. Okay, so the question is, would you fill in the full-time equivalency percentage for someone that's hired second semester only? Yes. If they are F or P on the annual report, because even if they work a partial year, they're either full-time or they're part-time based on the scheduled work for the time they were there, then the full-time equivalency percentage does have to be filled in. And it's based on, okay, let's say they start second semester. If they're a 100% employee paid off the salary schedule, but they're only getting half of the salary, that doesn't matter. They're still 100% for the full-time equivalency on here. Okay, I'm going to move ahead. Anyone else that has questions on full-time equivalency, you can email us. We may answer you by email versus it being answered today over the web, or give us a call and we'll answer those, because we know there is a lot of confusion with that. Okay, I think I talked about the annual salary rate and the creditable earnings. The next line there is the member TRS contributions. As on the supplementary report, this number equals exactly 9% of whatever you have listed as creditable earnings. That's what we expected to receive from the district. Regardless of what you sent in to us, this is what we are going to charge the district when we are reconciling the contributions. We reconcile contributions as a whole, not by person. So simply just calculate 9% of the creditable earnings amount that you have entered there, and that would be your contributions. If you enter a number from your payroll system and it doesn't equal 9% of creditable earnings, it's going to kick out an edit. I had that edit, I think, possibly whenever we were reviewing the supplementary reports. If your 9% doesn't calculate, go ahead and change that number to what it should be. Change it to whatever 9% of creditable earnings equals. The last line there is the sum of your creditable earnings paid from special trust or federal funds. On the annual report, you are required to tell us how much of the salary was paid out of a special trust or federal fund. So that would be Title I, Title II payments that we talked about earlier. Keep in mind, again, I will repeat that substitutes paid from special trust or federal funds and extra duty stipends paid from federal funds, the 10.10% is due on that. That is reportable here. You do want to reflect all salary in whatever form paid from special trust or federal funds for any employment type. Once you have all of this information entered, if you keep scrolling down, we're going to go through a couple of, well actually what I'll do is once you have the earnings information entered, probably the best thing to do is hit save at this point. You do have the ability to hit save and next record. It'll take you on to the next record if you don't have any other information to enter, or you can hit save and done, and that's going to take you back out to your original list. If any edits are invoked once you hit the save button, you're going to get an edit screen that looks similar to this. I showed the edits whenever we reviewed the supplementary report. There are a lot of the same edits in the supplementary report system as there are in the annual report system. Same rules. If you have an edit that appears in red, those are your fatal errors. They do have to be corrected before the system will allow you to submit the annual report. Any edits that appear in black, those are the non-fatal errors. You're going to notice out to the right, we have a brief definition of the 4-digit edit codes. Some of them are 3-digit edit codes here on the screen, but there's a blue eye out there. Click on that blue eye. That gives you a lot more information about that edit. So you've got a brief definition on screen, but if you click on the blue eye, a pop-up box will appear that's going to give you a more detailed explanation. So it's going to tell you exactly what the edit indicates and what kind of information we're looking for in an edit explanation. It kind of gives examples of what you can provide us to give us the information we need to resolve this edit on our end. As I mentioned earlier, write as much information as you can in the edit explanation box. You are required, if you have edits, you are required to enter an explanation. Our system's not smart enough to know if the information you enter is good or not, so if you enter something simply, this is correct, yeah, you've technically entered something in that box, but it is not helpful to us. Okay, so be detailed in it. Write a book. I think you have unlimited space to write the information that you need to provide to us. Anything you think we might find helpful, enter in that edit explanation box. That's going to help us out. That's going to cut down on the phone calls to you guys after the annual report comes in. And sometimes it's a couple of months after you submit that annual report before you ever hear from us. So you may submit that annual report prior to July 1st. We're not going to start actually processing any of those until after July 1. And then there are 10 of us, again, to review all 900 of these. And we have until the end of October to get that done. So you may hear from us right away, or it may be a while, because they are passed out randomly, and we work on them as we get time and as we go along. So the more information you provide here, that also helps you guys remember how you came up with the numbers, or how you or why you reported the information versus trying to remember it 3 months later. I know I came up with that number, but I don't really know how I came up with it. So again, that's more reason to enter the edit explanations, to provide as much information as you can there to do that. All right, so once you have got all of the earnings information and all of your edits entered, there's a couple of other sections that are underneath on that same update screen for each individual employee that you may or may not have information that you need to enter for those. If you have anybody that is terminating employment with the district, we do ask that you complete the terminated sick leave section for those individuals. This would be someone that you have not already filed a supplementary report for. So for any of your members that are retiring and you filed the supplementary report, you've already reported their unused sick leave days to us. This is just for people that are leaving the district that we're not aware of. Anyone that leaves the district, you should complete this section, even if they have 0 days left with the district. That way we know that you didn't simply forget to report the days. You're recognizing they were employed with you from their beginning to their ending employment dates, but they used all of their days and they had 0 left over. That's going to stop a lot of research in later years, because if we see that gap in service where sick days didn't get reported, chances are you could get a request 20 years down the road to do some research to find these sick leave days, and it ends up they had 0 to begin with. So it is important, even if they have 0, to go ahead and report that to us. Now, as far as the beginning date of employment, don't enter their hire date. Beginning date of employment is not their hire date, it's the first day of school that they started working for the district. Ending date of employment, that's going to be the last day of school. If they happen to resign in August, but they worked through June the 1st, put June 1st as the ending date there. When reporting number of sick leave days accumulated, we do actually ask that you round to the nearest 10th of a decimal place. This is the only place that you can enter partial days, is on your sick leave. So we actually go out to a 10th of a decimal place on sick leave days whenever reporting unused days to us. So if they have 250.75, you're actually going to round that up and enter 250.8. So round it to the nearest decimal place. If you need to make a correction to a terminated sick leave number of days reported, or if you have completed sick leave days for everyone you know that has terminated as of the date you file your annual report, and then someone turns their resignation date in after you've already filed the annual report, we don't have a formal process to make revisions. It's actually pretty simple, and it involves handwriting. So what we ask is that, there's no nice, neat little form that you can fill out. Is just print out the terminated sick leave report from the reports menu, handwrite your changes on it. So make any additions, or if for some reason someone resigned or was RIF'd and they get rehired, and you want to, days that you previously reported, you want to take those off, just cross their name out. If you reported the wrong number of days, for instance, let's say you forgot to report their unused personal leave days in their final year, just cross out the wrong information on that terminated sick leave report, write the correct information to the side, and then you can email it to us, although we don't prefer that you email it because it does include Social Security numbers. You can mail it, you can fax it, or you can use the secure upload. So that's going to be my #1 choice for you guys. For any information you need to send to us, take advantage of that secure upload and send your documentation to us that way. The next section you could possibly have to complete information for would be the leave of absence section. I kind of mentioned this whenever we had the question of how to report someone, the full-time equivalency for someone that's on a full year leave of absence. Well, you're not reporting anything because there shouldn't be any earnings reported. You would instead skip the earnings section, go straight down to the leave of absence section. This is to be completed for anyone that's on an approved leave of absence during the year. Okay, so if their leave of absence is approved, not that the fact that they're just absent and getting docked for days here and there. If they're on an approved leave of absence, and they end up being paid for less than 170 days, then you would complete this section for us. This basically alerts us to reach out and contact any members that might be interested in purchasing their leave of absence. So if they are on an approved leave of absence and they end up with less than a full year of service credit, so they're paid for less than 170 days, they can actually purchase that. And the sooner they do it, the cheaper it is for them. The longer they wait, the more expensive it is because the unpaid balance accrues interest on a monthly basis. We do ask that you don't include any dock days that occur outside of the approved leave period. So if you have someone on an approved leave for 6 weeks and they return and then they get docked a few days after their leave period, they cannot purchase those dock days. They're only allowed to purchase the approved leave of absence period. So that does not include any dock days outside of the leave period when reporting information in this section. And if you do have any specific questions on what you need to report here, I know some districts will call because they have individuals on 2 separate approved leave periods. I think you probably will end up having to enter some information in the comments section down below. But any questions you have, you can call and we can transfer you to our member accounts department, or feel free to email them at the address shown here on the slide. The last section, and this is going to be the most uncommon section. I don't expect to see a lot of districts that have anyone that qualifies for a sabbatical leave, but if you do have anyone on a true sabbatical leave granted in accordance with the school code, you would report their information to us here. We do have examples in Chapter 5. There are specific requirements for it to be considered a true sabbatical leave. I know with a true sabbatical leave, they have to be paid at least 50% of their salary from the prior year. If someone is on sabbatical leave, they are actually reported at the salary reportable prior to their leave, and contributions are due on that time period. I had the question yesterday as I have a teacher that says, you know, her terminology is she's gone for the year to further her studies, so she's on a sabbatical, but it's an unpaid leave. So if there is no payment for it by the district, there is no sabbatical leave. They do not qualify to get a full year of service credit or service credit for the time frame they are gone if it's not granted in accordance with the school code. So if you do have any questions on a sabbatical leave, contact us. We literally see probably less than 5 of these per year. It is very rare. So any questions on any of the information that gets entered from the update screen that you guys can think of right now? Any questions from the internet? Okay, once you have your employee information listed, or employees information entered, there are a couple other menu items that you can use here. One that I didn't highlight here, but I'll just go ahead and talk about. It's pretty self-explanatory. If you need to add any employee, you can just hit the add employee, and that will allow you to enter the Social Security number. So if you're recovering from a prior year, of course we're not going to know about any new employees, so you would use the add employee feature. To delete an employee, I'm going to go backwards just a little bit here. To delete an employee, if you're using the recover feature, it's going to pull in any of your employees from the 2017 school year, which includes any of your retirees from last year or anyone that may have terminated service. If you need to delete anyone off of the annual report, from the update screen there is actually a blue hyperlink in the employee information section to delete that employee off the annual report. So you do have that ability as well. Okay, the next thing you would complete is the remittances. This is what we use to balance your accounts. So this is the contribution balancing process. All balances that you owe to us, I mentioned this earlier, they are due by August the 15th to avoid penalties. So you have that window of using pay period 60 between July 11th and August the 15th. When you do your remittances, when you click on that screen, there's a nice button that we added a couple of years ago that says pre-fill. That will actually fill in your contributions remitted to us. You don't have to physically do that yourself. You can hit the pre-fill button. It's going to fill in the amounts that are currently sitting in your accounts, which is truly what we're going to balance against. If the remittance form themselves shows an amount due to TRS, that is what's due. So what we do is we net together, I guess I should say, we net together the 3 TRS contribution accounts, the 9%, the 0.58, and the federal fund. Once we net those together, it's going to give you a grand total of either what you owe TRS or what we may owe you if that balance exceeds $50. If you owe us money, it is due by August the 15th. You must pay it by August the 15th also to avoid a penalty. If we owe you money back, that's going to come back after the audit of your annual report. Same thing on the THIS screen. It's going to net together the employee and the member THIS, and it's going to show you if you owe us an amount due or if we owe you any money back. The next menu item is the compliance questionnaire. This menu links you to a series of questions about the district's practices. You are required to answer all of the questions, and yes, they are trick questions, okay? So we do have a lot of questions in there that seem like, why are they asking this? What are they trying to prove here? Well, we're actually trying to find out if you guys are reporting anything incorrectly. So it's kind of our clue if there's maybe a reporting error that we need to bring to your attention and make some corrections on. So please make your best effort at answering all the questions. If you're new and this is your first time doing the annual report, if you find a printed copy of last year's compliance questionnaire, please don't answer it the exact same way and just follow it right on down. Say yes, no, yes, no. Read the questions. Chances are, or possibly, prior bookkeepers could have filled that out incorrectly, or practices may have changed. So every year we kind of change up the questions maybe a little bit. Take a look at them, actually truly read them, and answer them to the best of your ability. If you answer them incorrectly, we'll get it figured out. I mean, don't worry about possibly answering it wrong. If we have any questions on it, we're going to give you a call and ask on it. But it is required, it does have to be completed before it's going to allow you to submit the annual report. The next menu here is your reports menu. This is where you can go out and view and print all of the reports that you have generated from the annual report. You can print out a draft report, you can print out a final report, you can even print out or view the terminated sick leave report, the leave of absence reports, or sabbatical leave report. You have the ability to go out and generate prior year annual reports all the way back to 1994-95. So if for some reason you need an old annual report that you can't find a copy of anymore, you can go out and print those out back to 1994-95. So there are many reports. You do have access to the reports menu all year round. Keep in mind, every June 1st, some of those reports are blank and they reset themselves. So once June 1st comes on, you don't have any information in there. You no longer have access to your terminated sick leave report from the prior year or have access to the final report, at least from the, that menu option there. Everything is in the prior year annual reports, though. So your 2017-18 annual report, as soon as we're done with our audit, that's considered a prior year annual report. It's always going to be there. The compliance questionnaire is another example. It gets wiped out and deleted and starts fresh every June 1. So if you didn't get a chance to print that out before June 1 and you go out there now, it's going to print out blank. The last menu item here that's enabled, and I will mention, once you submit your annual report to TRS from the Submit to TRS screen, you're going to notice that a lot of your menu options disable. They gray out. So once you submit it, you're done. You can't make any more changes to it. The Confirm Sum of Changes button, you're going to notice that's grayed out. The only time that gets enabled is after we are done reviewing your annual report, and I'll kind of talk about that a little bit next on what you need to do with that. But the Submit to TRS screen, it does have a menu on that screen. It's where you would actually go in to physically submit that report to TRS. It has a couple of check boxes there to kind of give you a guide on if you've completed everything you need to complete before you submit it. So it's going to let you know, have you entered edit explanations for everyone that has an edit. It asks a few questions like if you don't have any federal funds entered, it asks you to verify, is that correct? Or if you don't have any leave of absence information, is it correct that you did not have anyone on leave of absence? There's a couple of questions that we ask on there. If you do have someone on leave of absence, we ask for the first and last days of your school year for 2017-18. The contact information, there is a section to enter the contact information. That is who we should call with questions, okay? So please don't enter your superintendent's name there if that is not the person we need to call with questions, because they're not going to have any idea what we're asking whenever we call. So this truly is the person that completed the annual report and can help us with any questions that we have. And then when everything is 100% complete, you simply need to click on the Submit to TRS button. Once you click on Submit to TRS, it's actually going to tell you that your annual report has been successfully submitted, and you're also going to get a confirmation email. So that's going to let you know that it's been submitted. Another clue, as I mentioned, is you're going to notice a lot of your menu becomes disabled. So that kind of gives you a clue that the annual report has actually been submitted as well. This last grayed out button, as I mentioned, is the Confirm Sum of Changes. So you're going to receive an email after the audit of the annual report is complete. Every employer must certify that the annual report Summary of Changes report has been reviewed. The Summary of Changes report can actually be printed out and viewed from the Reports menu, and it's going to indicate that in the email that you received. So on this screen, you have to check a box on the screen and then just click Save. So it doesn't necessarily mean you agree with the changes we made. It just means that you have reviewed any changes. If we didn't make any changes to your annual report, your Summary of Changes report is going to be blank. But if we did make changes, that's going to be your copy of any changes that we made. And then you just have to ensure that you understand that we made changes to the annual report, and you have to verify that by the Confirm Sum of Changes. We will start sending out reminder emails after your annual report audit has been completed if you don't go in and do this. And I think if you continue to not go in and click on the Summary of Changes that you've confirmed it by December, then you're going to start getting phone calls from us. So it is really a quick process. It takes just a few seconds to go out here and click on that box. And once you've done that, your annual report is complete. So any questions on the annual report that you guys can think of right now? We don't have any questions coming in? Okay, again, like I said, the annual report is due by August the 15th, so start on it as soon as possible and get that in by 11:59 p.m. on the 15th of August. Okay, I'll talk about adjustments to earnings a little bit. What we use the adjustments to earnings for is if you find out you have any errors from prior years. We are required by law, or we can by law go back 4 years to make corrections. So if at any time you find that you have some prior year reporting errors, contact us to initiate this process. This is not a form that you find online. This is something that gets initiated by you contacting us. You can call us or you can email us. We actually prefer an email. You can email our Employer Services Department. The reason for that is we need a paper trail for any of the changes that we make. So even if you call us with changes, we may still ask you to send us an email with the information so we have some documentation for that change. If you owe any contributions as a result of us making changes to prior years, we will bill you for that on your monthly employer bill. And then once the change has posted to a member's account, each member receives a notification letter in the mail letting them know that the change has been made. So we know we have a lot of members that are really curious on when these changes are going to be made. If you do owe us contributions on changes, once that is paid by the employer, then that is when it posts to their account and the members receive that notification. All right, a little bit about what our department does. So outside of supplementary report, which is retirement season, and our annual report season, we fill our year doing field audits. We started doing field audits again as a result of requirement of GASB, which is the Governmental Accounting Standards Board. We are required by GASB to audit every school district at least once in a 10-year period. You may be audited honestly twice in a 10-year period because you could possibly be audited by TRS and then you could possibly be audited by our external auditors. We do pick these randomly, okay? So if you do get audited 2 years in a row, you haven't done anything wrong. You're randomly being picked by TRS or you're randomly being picked by our external auditors to be audited. Whenever we do an audit, we're picking a sample of people to look at based on the size of your district. We pick those people at random as well. We're going to contact you and ask you for documentation. We try to do the audits as much work as we can anyway in-house. Okay, so we ask you to upload your documents or mail your documents to us, and we're going to do most of the work here in-house. We are required to do an on-site visit to gather some census data information. So we still have to come to the district to verify things such as social security numbers, names, birth dates, genders. Make sure your records match our records. We also make sure that the job that the employees are in, that their position is something that's covered by TRS. So we check that on everyone in the sample, and then we also randomly pick 3 non-TRS employees to make sure that the work they're doing shouldn't be reported to us. We're not trying to play gotcha. We're not trying to find errors and try to point out what you're doing wrong. We're simply doing this to try to help you stay compliant with the TRS rules and regulations and to help you out. If we find errors, we simply correct them and we move forward. There are no penalties for any errors we find. We may require corrections, and we may require some of those corrections to go back 4 years, but once the corrections are made, we just want to make sure you're aware of proper reporting and how to do things going forward. So if you haven't had a field audit from us in the past, that's something that you can maybe expect in the next few years, and we do try to make it as painless as possible. Like I said, we're not trying to find what you're doing wrong and point a finger at you. We're there to just try to make sure you are doing it successfully and you continue to do that going forward. We also have been trying to do more training for new bookkeepers have been our target lately. With the implementation of having to do field audits again, our focus used to be training. Well, we had to drop off on that a little bit due to the time it takes to do the field audits, but we're trying to move in and we're trying to do some more trainings. We've been conducting some WebEx meetings, some monthly meetings. We're going to try to continue to provide additional web-based training. I mentioned earlier we have a lot of tutorials on our website. We recently added the employer tutorial menu item from the employer homepage. So it's not within the, from the secure access area, it's actually on the employer's homepage. from our website. You can click on that. We have tutorials on the supplementary reports, the annual report. We have tutorials on creditable earnings, on payment of contributions. So there are many tutorials you can make use of. We've also been sending out a lot of employer bulletins and emails recently. We send those out for a reason. So please take a look at those if you get a chance to review them. Grant mentioned with the upcoming changes we're going to have in the next couple of years, you're going to keep receiving lots of these. So you may be getting a lot of notifications, but we're doing it for help. We want to help you guys as much as we can. We want to bring as much stuff to your attention as we possibly can. So please pay attention to the bulletins and the emails. They're also always available on our website. So if you accidentally delete the email, we have an archive of all of the emails we've sent out. We have an archive of all of the employer bulletins that we've sent out available on our website. And then, of course, if you need to notify us of any updates to your contact information, do that. So if you have a change in bookkeepers or you have a change in people that we need to contact when we have questions, we don't know that unless someone lets us know. The contact people on file, that is who are receiving the emails about our bulletins and emails. So keep that up to date with us as much as possible. Any last questions that anyone can think of? Nothing else coming in from the internet? Okay, that concludes my part. I'm going to turn it back over to Grant, and he's going to go over some of the new legislation a little bit for you, and then we will let you guys out of here for the day. So I really appreciate it, and I thank everyone.
Thank you, Jenny. Another great job. You keep doing a good job, and it's expected, you know, the next time. So I just wanted to touch on a couple of things, but they're not minor things. One of them, Kim, if you can switch over to the website. Well, as I mentioned this morning, one of the things that happened, was that just yesterday, that the governor signed the Budget Implementation Act. So the budget has been signed. Part of that budget, there's really three things that we are working very quickly here at TRS. There are meetings every day. There was another meeting this morning that I'm anxious to hear what has come of that. But to find information about those three things, if you come to our web page, and this is the home page, and you click on this More button right in the middle, we have a little lead-in paragraph, and then we have dot points on the three things that we're working on. So Kim, if you can scroll down, let's go to the bottom and work up, actually. So one of the things in the budget that probably won't affect you out in the field is this accelerated pension benefit payment for retiring Tier 1 members. So if a Tier 1 member retires, right now, we are going to have to give that Tier 1 member a choice. And the choice is that they can receive their 3% COLA that they've been promised. And that 3% COLA would start, Chris helped me out, at age 60. January after their 60th birthday, 61st birthday, or January after the first year of retirement. So that's the normal, that's the way it's always been for Tier 1 members, but this new budget has created a choice. They can give up that 3% COLA. What do they get in exchange? They would get to keep 1.5% COLA. However, that 1.5% COLA would not start until age 67. It would not be compounded like the 3%. But what the member would get is the present value of the difference between those two things. So the difference between the 3% and the 1.5%. I'm not here to tell you it's a good idea for anybody to do that, but it was in the legislation. And I think I want to make clear too, anything that affects TRS, rarely is the fact that TRS is behind it. And we are reacting to the legislation that is passed. So that's one of the things we're working on, to come up with those calculations so that as people apply for retirement, we can give those numbers to them. If you scroll up, Kim, the second thing is an accelerated pension benefit for inactive members. So if somebody has TRS service but is no longer actively employed, these people will also have an option. And their option will be, and we have to reach out to these people, their option would be to take a present value of their future potential pension benefit, and we find out what that present value is, and we offer them 60%, so that they could take that in a lump sum, roll it over into a qualified plan, and then their service credit would be gone with us. So that's an option we are working on. Again, I'm not saying this is a good idea for anybody to do, but it's something now we have to implement. Now, the thing that will affect you, and probably is what everybody is curious about, is the fast cap. The fast cap moving from 6% to 3%. And that is effective the date the governor signed the bill. So, anybody, who is it going to apply to? I think that's the biggest question everybody has. And in the legislation, it is very clear that if you are in a current CBA, collective bargaining agreement, or an administrator contract, whatever, and somebody puts in their intent to retire, we are not going to impose the charge on salaries above 3%. It'll still be the 6%. So all current active CBAs will be honored. The other part of that, which extends it even a little bit further, is, let's say somebody is in a collective bargaining agreement that ends this year or even next year, and that you have a member who puts their intent to retire before that CBA ends. Okay? And that CBA promises this person 6% per year when they're on a retirement track. Even though there's a new CBA, we're going to honor the current CBA, even at the termination of that CBA. Did that make sense? I'm not sure I said it right. So, as long as the person puts their intent to retire in, and they will have to prove that, whatever is promised to them on a retirement track will be honored, and the 3% won't apply. So, how are we going to know? Was anybody around in this room back in 04-05 when the 6% went into effect? Okay. Fortunately for us, we have those procedures in place. Everything we did back then, which was before my time with TRS, we have record of it, we have it documented, and we're not going to try to reinvent the wheel. But what it means is we are going to have to get from you, the districts, the CBAs that you have on file that are current. And did we ask for the administrator contracts back then? Just the CBAs. Okay, yeah, so we asked for your CBAs. We need the begin date and the end date of the current CBAs. We also need a copy of the CBA. I'm not asking you to send it in right now. And we will also pick an age. People who are close to retirement, we're going to send you some questions about those people also. That's what we're working on right now, is to work through that process. Hopefully they came up with some ideas this morning. It's going to be pretty much the same questions, the same information that we needed back in 04-05. I hope, though, that we can automate it somehow, so that we're not just sending paper forms and you're handwriting it in and sending it back. Somehow we will automate that. So watch for that coming, because we need to start working on that pretty soon. I don't have any timelines on it, but we do need to implement it because it is effective. So we want those retirees, we want all that information in before the retirees come to us. Does that make sense? Any questions about the 3%? There's no extra charges. I mean, the charges are going to be calculated the same way over 3% as they are over 6% now, so there's nothing new about that. It's just changing that variable from 6 to 3. Okay? Yes?
If an administrator is in a 5-year contract and it doesn't state salaries in it, are they still exempt from the 6%?
If the administrator is in a 5-year contract, and say it again.
And it doesn't state any salary.
It doesn't state any salary when that person's on a retirement track.
Just doesn't state any other salaries. Are they still exempt from the 3 to 6%?
They fall subject to 6 and not 3.
Even though they don't have anything listed in their contract?
If no, I would, yes, that they are exempt. Okay. So there's no statement of salary, how much their increase is going to be each year in that contract, but they're in the middle of a contract, so we will honor the 6%, not the 3%. Right. Yeah, and we are getting a lot of those individual questions now, and some of them are even going to our legal counsel to decide, but yeah, that one seems pretty clear. All right, so if you have some specific questions, or if your administrators are asking, or your legal counsel is asking, those questions can be submitted, but they'll probably be routed to our legal counsel. All right? So more to come on that. Again, watch your employer bulletins, as Jenny said. And then let's talk briefly about our reporting frequency. Imagine a world with no annual reports. Sounds pretty good. Well, let me give you a little bit of history. We are going to move to a more frequent reporting system, and I leave it generic as a more frequent reporting system. I believe it's going to be every pay period. We want you to report to us. We have discussed a monthly reporting system, but leave it to say it is going to be more frequent than an annual basis. And this is something that TRS has wanted to do for quite some time. When Tier 3 was passed last year, part of Tier 3, it's a hybrid plan. So along with a defined benefit, there's also a defined contribution portion of the retirement, which means the employee will have a certain amount deducted from their paycheck that will go to this qualified defined contribution plan. And anytime you have that, we are bound by certain laws, and we have to get those contributions to the vendor who has the defined contribution plan in a timely manner. So we could not do that with any accuracy on an annual reporting basis. So that was really what was behind, hey, it's time. We got to start going to a more frequent reporting system. But even with that said, and we don't know when or if Tier 3 will ever happen. But there's also legislation out there that is proposing that TRS comes up with their own defined contribution plan outside of Tier 3. So at some point there may be one. But even without that, what are the advantages of a more frequent reporting system? Well, one advantage to you is you are involved every pay period as the year goes on, and not just once a year. When you're only involved once a year, especially some of these smaller districts, you need these reminders, these seminars, these tutorials. You know, how do I do this? Because I haven't done it since last year. And also, as you're filling out all the pages on the website, you know, I don't always remember what this employee did in August or September. So you will be reporting real time, every pay period, potentially, what your employees are getting paid, more importantly, what they're earning. So we're going to set up a system where you're involved every pay period. We'll have real-time data, so if the member is wanting to find out what their earnings are, what they've got in service credit, potentially they will be able to find real-time on our website. One of the things we're talking about doing there's going to be a lot more involved in just sending us a report every pay period. One of the things is onboarding. You have a new hire. Right now, it's really up to the employer to get that MIBD form in, but we're wanting to set up an employer portal so that you can log in every day. You can see on your dashboard, if you have a new employee in your district, you know they're on payroll, you can enter that new employee demographic information so that we have it real time. So it's immediately with us. So when we get that payroll information, that pay record, it doesn't bounce off and say, hey, this employee doesn't exist. Hopefully that employee is in our system. If you haven't entered that employee, then you'll get a questionnaire or some sort of edit saying you need to enter this person in the TRS portal. It'll also allow you to do name changes. Social Security number changes possibly. But it's really giving you more ownership of the data, giving you more control of the data that's in our system. All these things have to be worked out. It'll also, we're working on having the employee have a portal so that the employee can register in our system. If we go to a Tier 3, if that Tier 3 happens, one of the things the employee has to do is select which tier they want. They're going to come in as Tier 2, but if they want to elect Tier 3, they have to do that. And they only have a certain amount of time to do that. So through the portal, they can go in and make that election. And again, they can also go in and look at their, potentially look at their statement, look at their earnings, their service credit, and it's real-time information. So there's a lot of advantages to this. Claims should be sped up, so if somebody has a claim, we're going to have real-time information. It's not going to be a supplementary report necessarily that sends out to you. We may have a few questions for you, but the idea is to have more accurate, more timely information. That's the whole goal through this whole thing. So how are we going to get there? We're meeting, Chris in the back of the room and I have been meeting several times a week for the last few weeks, and that's going to continue, if not ramp up. And we have this team who is going to reach out to a work group. I don't know if anybody in here is on that work group. We've already have a list. If so, you'll find out soon. We're going to ask these people to work in testing through this whole process. Hopefully by July of next year, we'll have a pilot ready to go so that we can work with this work group for a whole year before we turn it out to the whole population. So there's a lot more to come on that also, but I think the benefits are going to be with you, with us, and ultimately the most important is with the members to have real-time information. So I can't give you many details because we're working a lot of details out still. Any questions about that? Does anybody have any concerns of going away from an annual reporting system? Would you rather have more frequent? Yeah, and that's the feeling we've been getting from everybody we've asked so far. We're the only ones on an annual reporting system as far as retirement systems that I know of. You know, we have some complications that say IMRF doesn't. IMRF is on a cash basis, so whatever that somebody earns or whatever somebody is paid is what's reported to IMRF. There's not a whole lot of intricacies. With us, we're on an accrual basis. So just one of the challenges that offers is the summer months. You have people who don't work during the summer but are getting paid during the summer. But yet we need all of that pay and remittances reported in a timely manner by July 10th. So there are some challenges to go this more frequent, but I'm sure we can work them out, and again, it'll benefit everybody. Do we have any questions, Kim? Nothing else? Okay, again, I appreciate everybody taking the time to watch on the internet and be here today. If you have any questions, be sure to use the contacts in the presentation. We're here to help you. Thank you.